Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis. Sometimes it might just come from the economic calendar or that and a combination of that with the headline news and geopolitical. But sometimes it can even get really confusing when the market sentiment changes and good news is now bad news. So we try to give you the information as to what's going on with the market and why it's doing what it's doing. So that way you can, if you're following along, just for perhaps you're looking to refinance or purchase and looking following rates. Hopefully, this will give you the information you need to know as if you were looking to lock in rates or anything. If you're in the industry, hopefully this will just kind of give you some information as to what's going on and where the market's going or rates going. And hopefully this will just give you some background information. A little bit about myself is I am a loan officer. I work with a national lender. We lend in all 50 states. If I could be of any service, whether it's a refinance or purchase, I'd love to earn your business, so please give me a shout. Uh, but more than that, we like to also be a resource. We like to be able to help you guys out. If you guys got any questions, please give us a shout. So without further ado, we'll jump right into the report. We'll start off with the economic calendar today. Today happens to be the big day for this week with the big high impact jobs report from the Bureau of Labor Statistics. We'll start off with the average earnings month over month in June. So the last month's revision had, the last month's revision came in a little higher from 0.3% to 0.4%. Forecast was supposed to keep pretty much the same pace at 0.3, and it came in expectations. Now, here's the big one we're looking at is non-farm payrolls. So the previous month, May, it got revised slightly lower from 390 down to 384. But there's a forecast of only 268,000, and it came in much hotter at 372,000. So this is actually a very good number, much hotter than what the expectations were. So this is obviously good news for the economy. Now we got average work week. The previous month was revised slightly lower from 34.6 to 34.5. Forecast was supposed to maintain the 34.6 and pretty much again maintain what it was before at 34.5. Now unemployment remained unchanged at 3.6%, and we got wholesale inventory. So this is kind of like the wholesalers kind of gearing up for business. So it went up 2% in the month of April. Forecast was kind of that same. Came a little shyer at 1.8%, but again, still very well. That means wholesalers are thinking the economy is still moving, so they're stocking up to go ahead and be able to resell, which is their forecasting, you know, forecasting more optimistically. So what's going on here today? Stocks and bonds are both in negative territory. Bonds are down 34 basis points. It's breaking below its 25-day moving average. So yesterday that held. It held the day before as we touched it, but today, basically, what that does that mean? Stocks are down primarily because good news is now bad news, as you may have, if you may not know. Basically, why is that? The policy, the Fed policy, if that's good economic data, Fed may be more persistent in continuing with or may not hesitate to continue with their very hawkish or aggressive approach towards inflation with their interest rate hikes. Now, a lot of them are coming out saying that they're in favor of the 75 basis point hike here in July. There's some that have said 50 basis point in September, so we'll wait and see what September might look like, but it's looking more and more like we'll see a 75 basis point hike for at least this month, perhaps next month as well, or perhaps they'll keep or maybe they'll reduce it. So time will tell regards to that. As for bonds, in general, good news is usually bad news for bonds, primarily because that means money's coming out of the bond market going into equity. So usually a good economy is doing well. And then, of course, for the same thing, Fed policies, rate hikes and stuff. So we're down again 34 base points, and what does that translate? It means basically mortgage rates are up today as a result. We broke above the 3%. Looks like we're touching off its 25-day moving average as well. So we're just under 3.0, basically just under 3.10. So at 3.097. So to round up, we'll go to 3.10. And that's kind of where we're sitting right now. And that was just after we were down, all the way down to like 2.7-ish, 2.75 range earlier this week. And today, we lost all that and moved all the way up just over 3% again. All right. Last but not least, we'll touch on what the average rate is for conforming loan limits. These are based off of yesterday's market and where they were. They are usually a day delayed, but they also have points added to them. So uh, that's why you won't find these in eighth increments, 8% increments. So we'll start off with the 30, or we'll start with 15 at 5%, and then the 30 years now at 5.73%. So these have been increasing, and then probably Monday we'll see this increase again. If you guys are looking for a rate quote or we can be of any service, again, please reach out. We're here to help you guys out. If you guys could do us a huge favor and like and share our videos, help our channel out, we greatly appreciate you folks. And want to thank you very much for your time and wish you guys a great rest of your day, weekend, and we'll look forward to see you guys on Monday. Take care. Bye bye.